The S&P 500 weekly chart in DeMark, looking back past the November-October low. You could see the sequential cluster here. Printed the 13s, gave us a pretty big clue here on the downside. Printed one ATM trend bar down, one red one, and then all green to this day. And all these 13s turned into recycled. But yeah, a lot of recycles, and just plowed and blasted right through all of these sell risk levels. Some of these go back really far. We've been over this before. Let's take another look. 9th of January 2022, around that era, beginning of that year. And then here's the sequential cluster sell risks here. And they were qualified and confirmed over here. And a whole nother slew of 13s printed here. Aggressive combo. This phantom combo just reached the 12-bar metric for downside price action, which there was none associated with this one. Same thing with this combo. It hasn't reached the 12-bar metric yet. It's been about 10 bars or 10 weeks. And here's your downside here on the aggressive sequential. So there was that downside, and its risk level is up here. And a sequential sell countdown 13 could print end of week next week on Friday the 17th with a close higher than 2 bars previous. So as long as it closes above this bar here, 5127.79, a 13 will print, and normally that's associated with trend exhaustion. But as we know, when trillions of dollars hits you in the back and knocks you out into the clearing, this is what happens here. So definitely something worth monitoring at this level, that close right here, 5127.79, and it's weeks away from getting any of these sell risk levels qualified, let alone confirmed. So just resistance for now, as these were back here, and it just blasted right through all of them. And the weekly inside bar did pan out. We had this inside bar week of 21st, and then this bar here we needed to get above this high, and it certainly did, with a vengeance on this week's. And I did not put any new longs on, but I did do a little bit of adding to existing positions. The S&P 500 daily chart in DeMark is a bit of a different story than the weekly. We definitely had some ATM trend bars down, red ones here, and now we're back in the green. And the sequential cluster 13s have been giving us pretty good clues. And on the economic report front, yet more Fed speak. There's two of them together blathering on. And then another one here, and then the Big Daddy speaks on Tuesday. Looks like after the Ppi, Producer Price Index report, comes out, which they have creeping up a little on the month over month, but core stays even, and I have yet to see anything from Wall Street Journal that Market Watch uses to put here for the other one, especially this one. This is the one that's really important, core PPI year over year. And then the fireworks with CPI. It's kind of odd to have PPI before CPI, but it happens sometimes. Normally it's actually after CPI, so PPI will give you a pretty good clue before the CPI reports, which has the headline inflation ticking up a little and year over year ticking down. This is Wall Street Journal again. core ticking down a little bit. Same thing with the core CPI year over year ticking down. So if this pans out, yeah, we'll see some pretty good upside, even if it comes close. Any kind of beat under these numbers, 3.8, I guess 3.7 would be decent. I'm sure we'll get some upside. Same thing with core. If it breaks even, it still won't be too bad. CPI year over year, I don't know, need some beats there. A little bit of wiggle room on the core CPI year over year. And then yet more Fed speak. Kashkari again, Bowman, this is ridiculous. And in this S&P 500 daily chart into market, I did some adjusting on the arc level up. So that's been working out pretty good. Price has been blasting through all these levels. This looks like it's going to hit the magnet levels, which is what you're looking for anyway. It hasn't done that for quite a long time, hitting the magnet level on these arcs. So let's see what happens this time. This will be bending down every day. So this one's 52, 58.60. And Zig Zag could be poised for a swing point to the downside here at the up wave B and down wave 2 on a tick lower on the highs. So with a lower high for Monday, there could possibly be a swing point. As you can see that the ATR4 for Zig Zag has had 5 or 6 days in a row with a lower ATR. So this one is lower than that one, this one is lower than that, that one's lower than this, that one's lower than this, and it stops there. So definitely 4 for sure. And we'll have to see what happens with that. If it ticks higher and then we get a higher ATR4, then it starts over. So this has been a tough one to call. This is again trying to do the impossible. So let's see what happens if it ticks lower for the high on Monday.